Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Welcome back after the long weekend.
Yeah, it's nice to have a couple of days off the market. The markets were open yesterday, and wasn't at showtime across Asia with gold and everything else. Anyway, we'll touch on that.
Yeah, plenty going on. So not much domestically, so we'll move straight to the UK. GDP came out once again, a negative month, 0.3, which was expected, but as we can see there, quarter on quarter, it's a few quarters now of that negative growth, and we've touched on their retail sales recently as well, and it's looking all pretty bleak.
Yes, it is. That's a lovely word, bleak, because they're moving into some sunshine, hopefully some spring, but the economy and the economic situation there is, as you mentioned, that one word, bleak. I don't know how you trade your way out. I mean, you have a look at where the pound is, have a look at where unemployment, and look naturally where the interest rate policy, and you've got nearly to the point of a stagflationary environment. Do you stimulate by having a rate cut, but you've got high inflation?
Well, inflation's still running at sort of between 4 and 5%. So
Yes.
Interest rates are at 15-year highs still,
Yep.
which probably explains why the pound is sort of holding up reasonably well.
Yeah, against the dollar, yes, Andrew. And I mean, really, if just for everyone there, that's been really channel trading over that period of time from the start of the year. Sure, we saw a fair bit of move in the latter part of 24, but since that period of the last, the last quarter, it's been pretty range bound, up to 127, 128, 128 and a half, and then back down to 125.50. The real interesting trade was pound versus yen.
But I think sort of the central bank there, if they wanted, they've got plenty of room to cut interest rates if they want to, because they're at 5.25%.
Exactly.
So there's plenty of room if they need to stimulate. So, but it looks like they're waiting for that inflation to come down a little bit further.
And with high energy prices, that's going to be fascinating over the third quarter. Have a look at WTI and Brent.
Yeah, it makes it tougher. So in the US, we had the ISM manufacturing numbers out overnight. First time above 50 for about 18 months.
Yeah.
And once again, we've talked about the resilience of the US economy, and it keeps on hanging in there.
It sure does. There's no doubting that. We'll see how the second quarter wears, and naturally, that's a good figure. And it's a positive number when you put your mind back to where you've got to go nearly to the part of the latter part of 22 to get some sort of lift off. So let's see if it continues over this summer period for the US.
Yeah. So also had the PCE numbers out last Friday, coming in at 0.3, which was the expectations. Year on year, 2.8.
Yep.
And this is probably one of the most important figures the Fed looks at.
Yes, it is. It certainly is. That's their number, and we'll see the stickiness over the next quarter. I mean, we're forward looking. We understand what Governor Waller's saying. We're understanding what Fed Chair Powell. Is it going to be June as far as blast off for a rate cut? Are we going to get one? Are we going to get two? Are we going to get three? Election 7 months out. Many moving parts to this, and I keep on getting back to it. You've got higher energy prices. That's not the number that they want to see as far as nearly $90 crude.
Yeah. And when some of these governors speak, there's a bit of a mixed message as well. Between them, which I don't think helps things, but that is how it works in the US.
That's right.
But it doesn't matter. I think you have 1, 2 or 3 rate cuts. They're all essentially expected.
Yes.
So there's going to be no surprise when it happens.
No, they're baked in, and it's probably going to be under surprising if you only get one.
Yeah.
Because the market's been really saying we're getting 3.
Yeah.
So it's a 68% chance, I think the numbers were, of a June rate cut.
Yeah. And if inflation does sort of pop up again, that's certainly going to take the wind out of the sails of the equity market.
Well, we're going to have a look at backwardation next week as far as oil futures and whether that backwardation, so the future months are all higher in price. It's going to be, again, how it rolls.
But if we look at the market darling at the moment, gold.
Yeah, it's on fire. Hit 22.85, close on it in day trade yesterday. It's sold off a little bit, but it's still at 22.70 odd right now. Let's see where central banks, have a look at physical demand. It's just very, very strong, Andrew, and it's been one-way traffic. Traders are loving it across the globe, and no one's backing down as far as where they think price is going to be. Analysts are saying many are 2,600 an ounce, troy ounce in 2024, and some are even well in excess of that at 3,000.
Yeah. Well, that 2,400 you could hit that very quickly.
Yes,
the way it's going. So, but we look at that chart there as well, like the buying of physical gold, particularly Russia, China, and India.
Yep.
It's obviously affects the price.
Yeah, I mean that's you look at the demand picture. It tells a story, and it's just one-way traffic. So we've just got to see again how this trades over this quarter.
Yep.
And if inflation, interest rate policies, geopolitical, you name it, and it could be a very, very sweet spot for gold.
Yeah, for sure.
Keep an eye on silver as well.
Yeah. And finally, inflation. Now, this just looks at it throughout COVID compared to pretty much now.
Yeah.
So obviously it's come down significantly, like ignoring Argentina and Turkey, unfortunately for them. But a lot of those countries, particularly in Europe, they've come down substantially. So
yes, they have. But so has growth.
That's right. The growth has pretty much disappeared. Inflation is clearly under control, but having the Euro bloc controlled with one set of interest rates makes it pretty difficult.
Very, very difficult. The situation in Turkey, you've got an election, there's a big chance Erdogan's going to get rolled. He's been there 2 decades. You've got Milei, the new Prime Minister or President of Argentina, and he's got some sweeping changes to government employment and just across the whole fabric of the Argentinian economy. So we strip those two out. Russia, it's relatively high, but they're in a good position with so much oil export and naturally all those base metals that they export to the world. So it's still, I look at Australia there 4%, Brazil 4.5%. It's expected that, I can understand why rate policy is where it's at the moment. So we'll just have to see again how that all rolls forward. But with higher energy prices, that's going to be a sticky point come the summer in the northern hemisphere.
Yeah. And I think sort of a lot of these countries got so used to low inflation for such a long period of time.
Yes.
It was low like for nearly a decade in some places.
Yes, exactly.
Whereas these levels are more normal sort of levels anyway.
Yes, they are.
And in quite a few places, the interest rate rises have been sort of taken in their stride. And I think, in a way, some of the central banks would have been thinking, wow, the economy and the labour market, etc., has held up quite well.
Yeah, so, in a lot of ways it has. Again, they're backward-looking metrics, so we'll have to see how it is over this quarter and the next quarter. 24, I think, will be full of surprises, so let's just wait and see.
But there's always a surprise around the corner.
Well, there is. I'm just seeing on that chart whether I can see Japan, and you haven't got anything there.
2.8.
Oh, 2.8, there you are.
Yeah, so that's quite low. That got up, but then again, they only got up to 4.3 during COVID, so they didn't have that spike like a lot of the other countries. So
exactly.
Yeah, under control as well. But anyway, we'll keep an eye on things, and we'll catch up again next week.
I look forward to it, Andrew.
Great. Thanks, Pete.
See you.
And that's the XM.com weekly market update.